Hi everyone, welcome to our first PowerPoint presentation for the second section of the semester, which is the different types of business entities. So I'm just going to take a couple of minutes at the beginning of this one to give you a bit of an overview of this section of the semester, because as you know, we completed the government section of the semester, which is the first 3 weeks, and we're already into week 4 of the semester. And this will take us through the next, I think it's 3 or 4 weeks. We're going to walk through different types of business entities, and you will also do your create a business assignment, as your project as part of this section. I'll have more information on that later, but for now, I just want to introduce this section. So when it comes time for any person or group of people, like if you and some friends or business acquaintances want to start your own business, you have options. It's not like the government's going to come in and say, you're a corporation, you're a sole proprietorship. You have a choice of the type of business entity you want to be. Every business out there that you can think of, from a landscaping service to a gas station to a school to a pizza place, are all some type of business entity. There's even, if you even decide you're not one of them, the law will give you one, so to speak. You don't really have a choice. So these are the ones that I'm going to run through this semester. We're going to learn about sole proprietorships and general partnerships. And then next week, we'll focus more on limited liability companies and corporations, both the C corporation and the S corporation. Now, there's other types of business entities that are covered in your textbook and that exist as well, like joint ventures. I just don't have time to focus on every single one of them in my PowerPoints. So these are the 5 that I really want you to be responsible. I'm counting S Corp and C Corp as being 2 different types of business entities, although they are both types of corporations. So for each one of these types of business entities, we're going to walk through the characteristics of each. What makes one business a sole proprietorship and another a limited liability company, in terms of its size, its management, how these entities are taxed, how the owners are or are not exposed to personal liabilities. How do you create each one of these? So we're going to go through all of those different characteristics. I'm going to try to hit a lot of the highlights in these PowerPoints, but again, your book walks you through all these steps as well. We'll also talk about the advantages and disadvantages. Why would one company want to be a limited liability company where another company might want to be a corporation? Maybe both are good choices. And then the other thing I want to point out as we launch into our discussion of these different business entities is that the law of business entities here, the law of corporations, is governed primarily by state law. Remember, we just finished our whole unit talking about the different sources of law and the government, and we spent quite a bit of time talking about the differences between the federal national government and then all the different states. When it comes to business law like this, the creation of a corporation or a limited liability company, this is a matter of state law, which means from state to state, every state has its own laws about how to create a partnership, an LLC, a corporation. There's obviously a lot of similarities, but there are some differences. And when you go to operate your business, we will talk about this more in our corporation section. But when we talk about creating your business, there might be some reasons why you would choose to incorporate your business in Massachusetts or perhaps another state, because the laws do have some differences state to state. So it's time for us to become aware again of where our laws come from. Are they federal laws or are they state laws, and how they affect us? The one law that does come from the federal government as it pertains to creating these businesses is tax law. So we're going to talk a little bit about how these entities are taxed, and how businesses are taxed is a matter of federal law, because although there are state taxes, we think about corporate tax as being a federal tax. So we'll mention that one as well. But primarily we're talking about states. All right, so some things to consider, when someone's starting a business. If I could hear from all of you right now, I would love for you all to think about if you are either starting your own business, thinking about starting your own business, or if you're not at all, but you're working as an employee either now or a job you've had in the past, think about where you worked. If you used to work at a restaurant, or you're currently working at a restaurant, or you're considering starting your own business, like a shop or whatever, just have some of those businesses in mind as we go through this. So think about the owners of those businesses, or if the owner is you, or you hope it is you, think about this. How did you form your business? Was it you by yourself, or did you need a partner or others forming the business with you? How did you fund your business? How did you get it started? Was it complicated to start the business? Did you have to fill out any paperwork with the state? A lot of cities and towns have requirements to file a license with the town to operate your business. I'm not going to focus on town or city law as a matter of this class, because it would be too much for us to cover that level of detail. But we are going to talk about when the state requires you to complete paperwork in order to run your business. For example, a corporation of a limited liability company, you have to complete extensive paperwork with the state before you can run your business as a corporation. That's a little different than a sole proprietorship, as we're going to get into. So we think about your favorite pizza place down the street. What did those owners have to do to get their business up and running as it is today? The other thing to think about in terms of the characteristics is, how much does a business plan to grow? Do you plan on keeping a business local, maybe just in your geographic region? Or are you thinking about growing your business to be a multinational corporation? So these are all characteristics that we're going to talk about. And of course, no class in business law would be complete without a discussion of liabilities. Remember, we spent a lot of time in just this last week in week 3 of the semester talking about the civil litigation system and how cases make its way through the court system. And we talked a lot about that word liability in our Kuhn versus Pub Zone discussion board. And that's what's important here. Unfortunately, it's a fact of life that businesses are going to be sued. There's not another way around that. Businesses are going to be sued. But think about this. As the owner of a business, if your business is sued because somebody slipped and fell in your grocery store, or burned themselves on a hot cup of coffee in your restaurant, and that person wanted to sue you, what is at risk if you were to lose? Now, of course, there's liability insurance, but keep the question of insurance aside. But what's at risk? You yourself as a business owner, you have your business, and maybe your business owns a building or has a lot of inventory in the building. But don't you also have your own personal assets? What belongs to you and not your business? Perhaps you own a house or a car, a computer, your own personal assets. One thing we need to start keeping in mind as we go through these different business entities is the difference between what your business owns here and also your own personal assets and your personal stuff, bank accounts, house, car, over here, and keeping those separate in our minds. And the reason that that is important, we talk about liabilities, is as a business owner, if your business is sued, and it will be for something, if you need to pay a plaintiff a civil damage, you don't want your own personal assets to be at risk. You want a shield or a protection over your own personal bank accounts. It might be your business that needs to pay out on that lawsuit. And again, your business would have insurance as well. But if the insurance doesn't cover something, the money can come from the business, not yourself. And this is something we're going to talk a lot about as we move through the different types of business entities, is how to protect yourself from those liabilities. So I can't believe I'm already at 10 minutes. This first PowerPoint is actually probably going to become 2 videos. I just thought I'd stop there and mention that. All right, so keep that in mind about the idea of lawsuits and liabilities as we move into talking about the first type of business entity, which is sole proprietorship. Okay, so again, in our list of all the business entities, sole proprietorship is number 1. Sole proprietorship is the easiest type of business entity to form. In fact, There is not a single shred of state paperwork required. You don't have to notify the state that you're running your business. You could literally wake up in the morning and decide, I'm running a business today. This is what I'm gonna do. I'm going to run a business. And you can tell by the name of sole proprietorship that by its very definition, a sole proprietorship is a one owner business. You cannot have a partner or another owner. If you take on a partner in your sole proprietorship, you've destroyed the nature of the sole proprietorship. You're still a business, but you can no longer call yourself a sole proprietorship. It's just one person. So you wake up in the morning, you decide, I'm running a business. Now, I put a couple of pieces of clip art here, and I'm actually going to focus on the first one up here because I think that that's a great example of a sole proprietorship. Maybe somebody who is a tutor. Maybe some of you in this class have tutored your classmates before, or if you received tutoring services, you paid for them. If you're me, you probably had a math tutor in high school because I was a terrible math student. So I used to have to get a tutor to help me with math. And I paid, or I'm sure my parents did, paid the tutor for her help. That is a great business to be a sole proprietorship because there are very few liabilities. And it's a very simple business to form. You don't need a lot of investors to be a tutoring business. You don't even need a physical location. You could go to somebody's house. You could tutor over Zoom, and you can run your business easily that way. You don't have to rent space or like a commercial kitchen or something just to run your business. But I want to come back to liabilities. What is a tutor likely to get sued over? Failing the test? That seems kind of like a silly thing to sue over. Someone who's a tutor is a great business. There's actually very little liabilities if you're going to somebody's home and tutoring them or tutoring them over Zoom. Now, if you had a physical location, like I know we have like these like companies like Kumon that actually tutor in buildings, there are potential liabilities in those buildings, right? Because somebody could come in and slip and fall or hit their head. So those are liabilities. And you could potentially have the liability of not paying your rent and getting sued by your landlord. So a tutor that has a physical location that they own or rent has liabilities. But if you're just tutoring like this over Zoom, or you're tutoring even in somebody's house, very unlikely to have a lot of civil liabilities. And that is something important because in a sole proprietorship, the sole owner is 100% responsible for all the business's liabilities. Remember, just a couple of minutes ago, I was talking about having that shield or wanting that protection over yourself when you're a business owner, that you don't want your own personal assets to be at risk if your business gets sued. Well, guess what one of the problems is with being a sole proprietorship? There is no shield over your business. You and your business are actually one and the same. It's very simple to form. That's a great advantage. Doesn't cost any money. You don't have to pay any money to the state. You could wake up in the morning and decide to run a tutoring service. But if you were to be sued, again, highly unlikely, your own personal assets are at risk. There is no liability shield. Keep that in mind because as we move through and talk about limited liability and corporation, we will see how, although those are more complicated entities, there is a shield over those owners. The last thing I want to mention about sole proprietorship is having to do with taxes. Remember, we talked about taxes being a matter of federal law, but the point I want to make here is that just like the liabilities are fully at risk, an owner of a sole proprietorship who makes money, like a tutor who makes, let's say I make $10,000 a year tutoring, I have to pay taxes on my earnings, but I am taxed as an individual. My business does not pay separate taxes. We will see how different that is when we get to corporations. We call these pass-through taxes because the taxes pass right through the business and right on to me, the individual. All right, I'm going to end this PowerPoint here and pick up the next one talking about general partnerships. But again, it's the same slides. It's just going to be a second video.